we are going to learn the other types of patterns today. So let's quickly get started. By the way, good evening, everyone.
Good evening.
Okay, so we know the meaning of it already. We mean things are unique formations that occurs on the graph or the chart, and their intended purpose is to tell us the next direction of a particular asset. Yeah, so once we are able to identify these special patterns, we then try to find opportunities. That is whether you enter and predict long or short. Okay, so we are done with candlesticks. And this week, we are going to, today, we are going to start with the other types of patterns, So we have the other types of patterns. We have what we call the multi-bar patterns. That will involve the double top, triple tops, double bottoms, triple bottoms. Then we have rectangles. We also talk about triangles. Then we talk about some other patterns. Okay. So now in drawing these patterns, as we discussed the other time, apart from the candlesticks, whereby we figure the unique types of candlesticks, this one, you will draw a line. The line can be circular, zigzag. By then, you will draw a line joining what? The highs and the lows on the chart to form a unique pattern. So this time around, we are not going to break only, let's say, 1, 2, or 3 candlesticks. But we are going to deal with multiple candlesticks. But what we have to do is that we will draw lines. To join the highs and the lows to get us these patterns. Okay. So the first pattern we are going to talk about. Before then, let's go back to what we should observe when drawing these patterns, what we should observe. We call something breakout. I told you breakout is what? A deviation from what? A trend line. Deviation from a trend line. So when you draw your pattern and your pattern is no longer containing the price movement and it breaks out of your pattern, call it breakout. Sometimes it can break out, but quickly, it will come back inside. So some breakouts are fake. So we have to also take note of breakouts are fake. Then before you draw your patterns, of course, you are drawing it to make sure you find an opportunity. So you have to prepare in mind that where are we going to enter if the patterns break out? You have to get that. That is using your stop orders to get an entry. And once you are going to enter, you have to also prepare where you can risk. That is, you have to get a protective stop loss. We also discussed retracement, whereby I said that a retracement is like a reversal, meaning there will be a temporary change of direction, and it will not change the general direction of the trend of the asset, of the moving asset. Okay. Then also, when there is a breakout, you have to wait for what? Confirmation. When there is a breakout, you have to wait for confirmation. For example, when we're dealing with the candlestick patterns, when we're talking about PSN lines, for example, we said you have to make sure you have to wait for the second candlestick to close above at least half. So that at least half there is what a confirmation. So confirmations are what set rules that you have to also observe once there is a breakout. And we do this in order to prevent what false breakout. Most of the times, whenever we draw a pattern and there is a breakout or there is a deviation from the trend lines, we quickly enter marketing before we realize it tends to the opposite direction. So you have to wait for what confirmation of your entry or your pattern before you can actually enter. So now the next inside. So the first pattern we are going to discuss is what we call the double top pattern. The double top pattern. I want to share my screen. Please, can you see the screen?
Yes, please.
Yeah. Okay. Now, before we get to the pattern, this thing I had wanted to reserve so that we treat it specially. But then I have to give you a gist of it, or I have to explain it before we can actually talk about the patterns. What we have to know is what we call support and resistance. Support and resistance. So when we say support and resistance, it's talking about what? A place or a point at which the market what reverse, or the price or the trend reverse. Support and resistance, they are what? They are points or like specific places where what the trend of an asset reverse. And how do we know the support and resistance? You will see that there is what? A consolidation, meaning there will be what? More candlesticks accumulating at that particular place. And we call that place either support or what? Resistance. And we draw this support and resistance with what? With lines, because it will involve multiple candlesticks. So those lines, we have support and resistance lines that we draw. Then when we are drawing patterns to, when we draw patterns to the lines, the two lines that we draw, we also can use it as what? Our support, and also you can term other part as what? Resistance. So now, when we say resistance, when an asset is moving in an uptrend, when an asset is moving in an uptrend, the place or the point at which the asset will go and bounce and reverse back in what? In downtrend, or whether it will retrace, we call that place resistance. Meaning they are what? They are resisting the upward movement of what? The asset. And when we say support, support is the opposite of what? Resistance. The support is when the asset is moving downward, the point at which it will also bounce and retrace, or even change the direction completely. We call that point, or that region what? A support region. I hope the explanation is clear.
Guys, you should be answering no, because you are the ones learning. Is the explanation clear to you, please?
Can I continue? Okay. Let's take this diagram, for example. Let me go back. Okay. Let's take this diagram, for example. You could see that you could see that you could see that yes. You could see that at that place there are what the mark the price or the trend went to that line and it bounces back. You understand? So you could see a swing highs. We have already talked about it. You will see that a swing high, it will just go there, hit there and change the direction. Go, hit there and change the direction. So that arrow there or that line will be referred to as what? Our resistance. Likewise, if we come below here, let's say yes, let's say this place. You could see there is what? The mark the trend. It hit there below. It was what? It was coming down. Let's say from this place, it was coming down. It hit there and bounces to upward. You understand? From here like this, it was like this. It hits and bounces upward. So that line below there will serve as what? A support line. So in later days, we will actually learn how to draw support and resistance. But today, I just want you to understand the meaning of support and resistance. I just want you to understand the meaning of support and resistance. Hope it's clear.
Yes, sir.
Yes, it's clear. Now, we also learned that when we have three main types of patterns. We have what? We have the bullish. No, we have what? The continuation patterns. Then we have what? The reversal patterns. But then we are looking for a trend. So we have what? We have a bullish pattern, meaning a pattern that will signal what? An uptrend. Then we also have what? A bearish pattern, a pattern that will signal what? Downtrend. That is what we are looking for. Now, after we get that pattern, we have other patterns too that will continue a trend. They will not reverse the trend. They will continue the trend. So we have continuation patterns, then we have what? Reversal patterns. But then generally we are looking for what? Bullish and what? Bearish patterns. Okay. And we also learned the other time that when we say bullish patterns, they are mostly formed at the bottom of what? A downtrend. They are mostly formed at the bottom of a downtrend. Then when we say bearish patterns, they are also mostly formed at the top of what? At the top of what? An uptrend. So you have to keep the basic rule in your mind. So whenever an asset is dropping down, and you want to what? You want a pattern to enter, you should consider what? A bullish trend. Okay. And when an asset is when an asset is also moving up, you should also consider what? Consider a bearish pattern. Okay. So now, what we are going to discuss here is what? A bullish and what? And bearish pattern. So the first one is what? Double top. The double top pattern. So with a double top bearish pattern, it signals what? Bearish movement. What happened is that the asset initially what? Will be moving in what? An upward direction. Then it will go and what? Form two peaks. It will go and form two peaks, which are what? Almost locating at the same place. I mean, the price should be almost at the same price. And that place or that line at which it will bounce, we will call it what? The resistance. So we will see two peaks. Then in between the two peaks will be what? A low. So the one low will be what? Differentiating between the two highs. So for example, in this image, the asset initially what? Will be moving. Yes, it will be moving up. It will be moving up. Then it will move to this first peak, the A. Then it will bounce back because it has what? Hit a resistance. Then it will what? It will go again and it will bounce back again. So once this M is formed, having two peaks and what? One low, we say a double bottom is what? A double top thing is formed. A double top pattern is formed. So you should consider when looking for double top, you should note that the asset will be moving in an upward direction. Then it will what? It will go and hit what? It will go and hit a resistance. Leave what? Two peaks. Then there will be what? One low separating them. There will be one low separating them. So when this happens, the line at which the low is what? Also sitting on, we term it as what? The neckline or the resistance line. The neckline or the resistance line. So in this image, you could see this line. This line is what? Is the neckline. So what do you do as a trader when you first see this M shape or double top forming? What do? You have to wait for it to break out. And the breakout is when the asset move back and what? And crosses the neckline. When the asset move back and crosses the neckline, that is what? A breakout. So always you have to wait for it to what? You have to go inside though. It's noisy. Always you have to wait for it to break out. That is, you have to wait for it to what? Cross the neckline before you can what? You can enter. Before you can enter. But then take note of this. As we learned retracement, in this image, sure, there is a breakout, but then there is what? There is what? A short retracement before what? Before the trend started moving downward. So always, it's not like when it break out, you will quickly jump in. Some fake breakouts can break out and the retracement can even go back here, and can even form what we call triple top. Later we will discuss or it will continue what? It will continue the uptrend. But then wait for what? A breakout. Then you wait for the retracement before you consider that this is what? An opportunity for me to enter the market. Now, how will you enter the market in a double top? How will you enter the market in the double top? Once you see the which has formed and you are waiting for what? You are waiting for an entry. Quickly, what you can do is that you place your order on the resistance line, on the neckline. You place your order on the neckline. You understand? Which means that when it breaks out downward, immediately you what? You enter the market. Now, where will you put your stop loss? At first, you put your stop loss at where? The resistance line. You put your stop loss there. Meaning, if it comes back to that resistance line again, that's where you want to leave the market. But then, immediately it retraces back and what? Begins to move. Quickly bring your stop loss here. Quickly bring your stop loss here so that you will reduce your risk. I hope you get me. Please, are you following?
Yes, we're following.
Yes. Good. So I have combined two things here. I have shown you what double top is and what they mean and how you can trade double top. So first, those of you who would like to always predict that an asset will be going down, before you trade a double top, you have to make sure first is what? Upward movement. Go and form that M, whatever. You know what your neckline or your resistance line. You know your entry, which is almost on the resistance line. Then you what? Your stop. You have to know your stop. Then, if you want to take profit, the first profit that you take is to what? Is to measure the distance between your resistance and the support line. Measure this distance. Calculate that same distance here. So you could see the arrow. You calculate that same distance. Then you use that distance as what? Your first take profit. You use it as what? Your first take profit. Before you can calculate, you can think of your subsequent take profits. You understand? And we have been advising you that at least you should take 50% when your target one hits. You should take 50%, even up to 70% when you first hit your target. Then you consider the rest. By then, once you take your first profit, you can bring your stop loss at what? Your entry point. You can bring your stop loss at entry point. Then you move on. I hope the explanation of the double top is what? Is okay. We can move on. If it's okay and there is no question.
It's okay with me. But I can't tell of the others.
Okay. So this is a typical double top in using the candlestick. So you could see there is what? There is a first peak, a second peak. Sometimes the double top can form, but the peak won't show correctly like this for you. But then you can see something like this here. But then you can see the first peak may show correctly, but here may not show correct. It will consolidate a little here. It can also be termed as what? A double top. Then you could see your neckline. So immediately this is formed, you will start thinking because you want an opportunity You think about your entry. You think about what? Your stop. You think about your take profit. But for better, for some traders, they are smart enough is once they see the M, they know that what? They know that sometimes it retraces. For example, if you look at this, you could see after the breakout here, there is what? A retrace here. There is a retrace here. So for some people, those who know who do DCAs, they will do is, so they will place their first entry at the neckline. However, they will not put all their eggs in that entry. They will wait for a retrace. Let's say they can divide the support line into, let's say, 2 or 3, so that if in case it retraces, for example, like this, they will buy. Like this, they will buy. You understand? Then they what? They move on. When it happens like that, they shift their what? Their entry positions in a better shape, in a better condition than those who actually place all entries on the neckline. This is just a trick that you can also use for your end. But then let's go to the next. Today I'm not using my own phone, so I don't have Binance, I don't have anything. So maybe probably tomorrow we can use the trading views. Now the opposite of what? Double top is what? Double bottom. And because it is, once it is opposite, it is what? A bullish pattern. So before you consider that, make sure the asset is what? Moving in a downtrend. The asset is moving in a downtrend. Then you get what? 2 lows. You get 2 lows, which is what? Situating at almost at the same time. So that will be your what? Your support line. So the dotted line here will be what? Will be support. Then you get what? The 2 peaks separated by what? One, the 2 lows separated by what? 1 high or 1 peak, which is the what? The dark line. And here it will be your what? Your resistance. So we are going to what? Change the entries, take profit. You are just going to reverse it. So here the same thing. You enter at the neckline. You put your stop loss at what? The peak. You put your stop loss there. In case there's a retrace, once the retrace is done, you what? You quickly move your stop loss. You take your profit by measuring what? The same size of your support and resistance. Then you what? You use it as your first take profit. After taking your first take profit, you can bring your stop loss at what? Your neckline. Then you wait for your other take profits to cover. First, for double top, make sure the asset is what? Moving in a what? A down trend. Hope the explanation is cool.
Yes, Rich.
Okay. So if you see this image, it will explain it perfectly. You have a downtrend, you have 2 tones, 1 peak, you have your breakout, resistance, support, then the range where you take your profit. Now we have what? Triple top. Triple top is what? Just like we learned about double top. This time, let's say a double top has formed. By Three tops, you will get three tops. It is also what? A bullish pattern. That is what we call the triple top. So it is what? A bullish pattern. I hope the explanation is clear.
Please come again. My network went off, so I couldn't record that one. Come again.
Okay. I said triple top. This top. It is formed at what? At the top of what? An upward trend or an uptrend. And now it's like there is additional peak and additional trough to what? To the double top. So you could see the double top is there, but then it couldn't break the neckline. It went back again and bounces on what? On the resistance to form what? Another peak. Then it came later to break out. So at the end of the day, you have what? Two lows and three highs in what? In the support resistance zone. So it is what? It is also a bearish pattern. It's a bearish pattern. It's a bearish pattern. So just like how you traded the double top, once there is a breakout, you put your entry at what? At the neckline. You put your entry at the neckline. Then you measure your take profits. You calculate your what? Your stop loss. That will be what? First at where? The resistance line. Then later, you will bring it to where it will retrace. Then after you take your first profits, you bring it to what? Your entry position. I hope the explanation is okay.
Yes, please.
Yeah, it's okay.
Okay. So the opposite, this thing is what? Is a psychology. So the opposite of what? The triple top is also what? Triple bottom or bottom in that way. So this time around, it occurs where the asset will be moving what? Downward. The asset will be moving downward. But then it will come and hit a resistance forming three peaks. A support forming three peaks. Then a resistance forming two. I'm just interchanging them, sorry. It will come and hit on what? A support forming what? Three lows or trough. Then it will bounce back and form what? Two peaks on what? On the resistance. That will separate what? The three bottoms. So here is the same as the double bottom. Your entry on the neckline. You put your stop loss on the resistance. Once there is a retracement, you bring your stop loss back on the retracement. You measure your take profits, which will be what? The same distance as your support resistance. Then you do what? Once you take first profits, you bring back your stop loss at your entry. So this is also what? It's the same as what? Or exactly the same as what? The double bottom. And it is what? A bullish pattern. It's a bullish pattern. It's a bullish pattern. By the way, the other time I was explaining bullish reversal, sometimes our English may deceive us. So I made a little bit mistake there. But then bullish pattern and bullish reversal is the same thing. So when we hear bullish reversal patterns are what? They signal what? An end of what? A downtrend. And the trend is what? Is now going towards the upward direction. And when you talk about bearish reversal, the same as bearish patterns. And it's what? It means the upward direction is what? About to end. And what? The downward direction is taking over. So take note. Okay, so this is what? An image explaining what? The triple bottom. The triple bottom. So you have your neckline, you have your trade trough, you have your entry, you have your breakout, the retracement or pullback, then your take profit. I hope that one is also okay. Yeah, so you could see it like this. When we go towards the various charts, you will still see them. You are going to what? Try and what? Get these patterns on what? On an actual chart. That will be tomorrow. And even right from here, you can go to your various charts or open your Binance. This what? Moving in what? In a downward direction. You go there and look for what? Your bullish patterns. By then, you have to try the time frames. You have to try the time frames. Maybe you may be searching it on 1 minute, 3 minutes, it will not be there. But then, if you go to 5 minutes or 15 minutes, you will see what? You will see the patterns clearer there. So, you will be practicing right from here. Okay. Time is okay. We still have time. Okay. So let's continue. Now that we are done with what? The triple, the double, whatever, let's go to what we call what? Wedges. Let's go to what we call wedges. So, I said we have what? Other patterns that we draw what we call triangles. We draw what we call triangles. So, the wedges, they are what? They form part of what? The triangles. All that we are saying is that we will draw two trend lines. When we draw two trend lines, and when they connect with what? Their ends, it will open up to form something we call almost a triangle. And you know we have different types of triangle. So once we get two lines and another line, once we get two lines and another imagery line, we call it a triangle. So wedge is part of what? The patterns that looks like what? Triangles. Good. And I said we draw them using what? The highs and the lows. We use the highs and the lows. So it depends on what the type of wedge that is formed and what's the location. The location. So always we should consider what? The location. Good. So the wedges too, we have what? We have a falling wedge and what? A bullish, a falling wedge and what? A rising, a falling wedge and what? A rising. Now, rising wedge is what? A bearish pattern or bearish reversal pattern. That is what? A rising wedge. A bearish reversal pattern. Then a falling wedge is what? A bullish pattern or bullish reversal pattern. Now, when do we see a rising wedge? once we mention that rising wedge is what? A bearish reversal or a bearish pattern, it means we are going to locate this wedge what? At the top of what? An uptrend, yes. And when we say bullish wedge or bullish reversal wedge, what we mean like falling wedge, it means we are going to see it what, at the bottom of what? At the bottom of a downtrend. Okay, so this is an example. This is an example of what? A rising wedge. So you could see we have these lines, and this one, if you continue to draw the lines, you will see it will meet at a point. That's why we call the wedges, they are classified under triangles. But then when we are dealing with the triangular patterns, those ones, they have to what? Meet before you actually call them the triangles. I hope the explanation is clear. So with this one, you could see we are connecting what? Our lows and highs. So we connected this place, we connected this place, we connected this place to form what? Our support. Then on top here too, we have this side, we have this side, and we have this side to serve as what? Our resistance. So now we want to short this. We want to short this what? This asset moving in what? In an upward direction. So we quickly look for what? A rising wedge. It's mostly common. We quickly look for what? A rising wedge. Now what do we want? We want it to break out here. We want it to break out downward. So once we want it to break out. Okay. So once it breaks out from what? The lines, it breaks out downward. We say it has what? It has broken out. So we wait for that candle to close above what? To close below our support. To close below our support. So this one, to how do we trade it? Once there is a breakout, definitely most of the times there is what? A retracement. So where it breaks out, you quickly what? Put your entry there. You put your entry there. Then you put your stop loss at what? At the high. At the high. Then, but this time you could see that the highs are not what? On the same level. The highs are not on the same level as compared to the double top and the rectangular patterns. You understand? So you put it at this very high. Then you what? You wait for your take profit. If you want to take profit, you measure this place. You measure the higher gap. You bring it down here. Then you make it as what your take profit one. That is your shorting. And once the retracement is done, you bring your what? You bring your stop loss at where your entry. Then you relax for the trade. So when we say what? A rising wedge is what? Is a bearish pattern or bearish reversal pattern. Okay. I hope the understanding is clear. Explanation, sorry. Okay. So in this example, let's get here. You could see we had a breakout. We had a breakout here. We had a breakout. Then we saw it moving downward. Now, in case you are trading and what you see a rising wedge, a rising wedge forming what at the bottom of what a downtrend like this one, a rising wedge forming at the bottom of a downtrend. Already we have discussed that it's supposed to be what formed at the top of what an uptrend. Now, in case it is formed at the what the bottom of a downtrend, who can tell me the possible breakout? Are we going up or we are going down? Let's just use our psychology and cast a lot or guess what we think. If we find a rising wedge in this example, forming what? Forming at what? At the bottom of what? A downtrend. At the bottom of a downtrend, what will be the possible breakout? This is a question. Are we there?
This one, just share your
Please,
views.
are we following?
Just share your views. What do you
I've
think?
asked a question. Hello? Mr. Kumi, please, are you there?
Yes, I'm here.
Mrs. Gifty, please, are you there?
I'm here. Can you hear me? Hello? Hello?
Please, can you hear me?
Sir, can you? Hello? Hello?
Yeah, we can hear you.
Hello? Hello?
I can hear you. His network is gone. We are waiting for him to come. But Miss Gifty, unless you yourself connect your mic, it seems nobody has muted you. Unless you yourself connect your mic, Miss Gifty. Good.
Okay, you can speak. Okay, let me continue because my battery will go off soon, so that we're done with the wedge, the rising and the falling. Okay, so now in this one, you could see that the price or the direction still is bearish. Why? This time around, The rising wedge is serving as what? A bearish continuation pattern. Bearish continuation pattern. So whenever you see an asset or like you see a rising wedge, whether on top or in between or below below a downtrend, it is still a bearish pattern. So kindly stay out of all your longs, because this one, it can be a fake pump. It can be a fake pump, and people will think that the asset will be going, but then it will be forming a rising wedge. Before you realize, they dump it over you. So rising wedge can serve as a bullish, a bearish reversal, and bearish continuation pattern. Bearish reversal and bearish continuation pattern. If you go to the falling wedge is also drawn the same as the rising wedge. It's drawn the same as the rising wedge. However, we are expecting it to be formed at the bottom of a downtrend. At the bottom of a downtrend. So you could see our lows, swing low. And downtrend, so we know how to describe them. So this one too, where will be your entry? You are waiting for it to break down, because you want it to go up. So you are looking for it to let's go this. Good. You are looking for it to break down, to break out, upward. So immediately there is a breakout, you quickly you put your entry at where the line is. This one you can call it a neckline or whatever. But then you put your entry on the line for possible retracement. You put your stop loss at one of this place, or even here. You put your stop loss here. Then you take your first profit by measuring the distance here and put it here. Then you take your profit. So falling wedge is it's a bullish reversal pattern. A bullish reversal pattern. So likewise, it can also serve as a bullish continuation pattern. When you see it forming at top of an uptrend. So in this image, you could see there is a breakout, and after that the market began to move up. The market began to move up. Good. In the next example, this time around, you could see a falling wedge forming on top of an uptrend. It means it wants to continue the uptrend. So it will just rest with this falling wedge, and it will continue in the next image. So in this case too, if you want to enter the market, once you draw your support resistance in the continuation, once you draw your support resistance, you wait for a breakout, because this time you still want to go long. But then what you have to do is you have to divide your entries as the trick that I show you. Maybe you put your first at the line where it will break out. Maybe there will be a possible retracement, maybe at this place. Then you enter again. Then you wait for it to move up your profit. Some too can place their trade, or once they are able to consider that it is forming a falling wedge, they can place their orders here on the resistance line at where they think it will go. That will be their first entry. They wait for the breakout. They put an entry there again. They accumulate more, then they move. But then before they will do that, they already know where their stop loss will be. So always when you are entering the market, you have to know where you put your stop loss before you even enter. That's very important. So let's take note. So a falling wedge can also serve as what? A bullish continuation pattern, whereby it will form at the top of what? An uptrend. Hope it's okay. Okay, so today we are done with what? We are done with double top, triple top, double bottom, triple bottom. We are done with what? The wedges. We are done with the wedges. Great. So we will end what we are supposed to learn today here. At least we have gotten what? 3 bullish patterns and what? And 3 bearish patterns. And how do we draw them? I have explained. We use the lows and the high. We use what? 2 lines. Then we join our lows and highs. So immediately an asset is moving and begins to what? Consolidate at a particular place. Consolidate at a particular place. That is support resistance zone. Quickly, you try to draw a line joining the lows and the high. After drawing that line perfectly, it will give you the type of pattern that particular asset is formed. Then you just you visit your memory that, oh, if this pattern is a round wedge, then what does it mean? Then it will tell you the type of opportunity you should be looking for. All right, so if there is any question, let's hear it out before my battery will go down. Tomorrow you continue with the other triangular patterns. Then we consider the rectangular patterns. Then we consider the pennants, and then any other pattern that we have to learn to. So the question.
Yeah, when I was recording, my this thing went off. It came when the answer had been given. You were asking a question before you went off, if you remember, about the downtrend. I don't know if they gave the answer and what answer they gave, so that I can capture it in the video.
Someone speaking.
Did you hear me, please?
Please, I'm no.
Can you hear me? Can you hear me?
Any question?
Yeah, I was asking a question.
I heard.
Yeah, please, Mr. Iman, please let me quickly come in here, okay, so you can ask your question.
Oh, it's me that.
Framo, can you hear me?
Getting me.
Okay.
It seems it's network. Hello? Maybe his network.
Yeah, I can hear you.
Please ask your question. Maybe his network is not helping.
If I were asking a question now, I would probably need to go about the whole thing. It's well thought of. It's very instructive. The lecture was okay, but because I missed some before, If I probably going to have any question, it should be something that I want to believe. Maybe I've missed the classes that I've missed, but everything from where I came in was well thought of.
We thank God.
So
thank God.
I think for me, I think one of the things I want to do is, if check the markets, usually when you see tops, double bottoms, there are some that are not like a perfect one with the picture or with the image that we see in the classes like this. So, maybe it's going to be like a question I'm going to ask now. Where will you say is a perfect one? Is it like on a daily trend or a 4 hours trend that you could find a perfect one? So maybe that's the thing I could have. But I think from what I've listened so far, and I've been able to listen over and over again, I will be very, very good on it. So that's what I would just say.
All right.
This time.
All right. So first of
thank you.
all, I will share the videos with you. The ones you have already done, I will take my time to share it with you later on, and then you, after watching them, you just add today's own to it. Now, to your question, it depends whether you want to be a scalper, a day trader. With a day trader, we have the 1 minute traders, we have the 2 minute traders, 5 minute traders, 1 hour traders here and there. You get it?
Okay.
The more the minutes or hours, the more the stronger confirmation. You get it? Sometimes we have the week traders and we have the month traders. So you can just look at the chart. If you are going for the week, you will see a stronger confirmation. You get it? But then it has to be confirming from the minutes before it get to the hours, before it get to the days and weeks. You get it? But on the normal day trading, most of the time the strong confirmations are on the 4 hour trade chart. You get it? Most of the time the strong distance on the 4 hours. But then depending on how you actually want to go in, maybe you want to go in and come out faster. You get it? That is true scalping. That's why let's say 1 minute to 5 minutes, you can just quickly analyze the market, make use of it, and then exit fast, because anything can happen. But then on the stronger note, I recommend the 4 hours one. And also, let's say the 1 day old, okay? But the 1 hour confirmation too is not bad. But then on the stronger note, you can go for the 4 hours confirmation.
Okay. All right. Like I said, I think the best thing is to practicalize all this.
Yes. Today, tomorrow is going to take us through, but either trading view, or we are going to use the live one. You get it? So today was not the live one, just the sketchical one, which he is using to explain to you, so that in case you get to the live one, you will not be confused. You will know what you are looking for. You get it? Because if we don't take you through the normal sketchy one for you to actually grasp the distance, and we take you to the live one, on the live one you see it will be so many. You have to be able to have an eagle eye to be able to spot things. You get it? That's why it is always important to understand each candlestick and how and their meaning. You get it? Which we have already done. I'll try to get the videos for you so that you can take your time to go through our trainings. I will say you will never regret joining us, as far as you are willing to learn with us. It is always what good. You are not going to what regret. So welcome on board. I'll get you the videos, and then you watch. You have questions, feel free to ask any of the admins. We are always available to what reply. If you get one and maybe the person is not online, feel free to send a different admin a message. We are always there to help our members to understand whatever we are teaching them. Yes. Please, can you hear me?